In this video, we're looking at the second sample assessment for business tax. Let's start off with task 1, which is about adjusting accounting profits and losses for tax purposes. So part A asks us to identify whether the following statements are true or false. The first then, a business spent £800 renewing a 65-year lease. This is capital expenditure. So ordinarily we'd think about capital expenditure in terms of buying a non-current asset. But in this case, we're not buying an asset, we're renewing a lease. So to help us, we have the reference materials, and we're looking at section 6 of the reference materials now. And if we look down and have a look at capital expenditure, so there's information there about depreciation and gains and capital items expensed. But that doesn't really help very much. But what we can see though, there is a section on legal and professional, and we can see that capital items, including the purchase of leases and renewal of long leases, well, that would be disallowable. Okay. However, if we have legal fees on the renewal of a short lease, which is 50 years or less, that would be okay. So in this case, we're spending money on a 65-year lease, that's a long lease, and therefore that would be not allowable and would be treated as capital expenditure. So the answer to that is true. And then the second statement, if a sole trader chooses to use the cash basis of accounting, their accounting profit will always be the same as their taxable trading profit. Remember, under the cash basis, we're simply going to treat our income and expenses on a cash received basis, so we don't have to worry about doing things like spreading the cost of our fixed assets over time. We wouldn't really worry about any capital allowances. However, the statement is not correct. It is a false statement because there are some items that would still be adjusted even if we're using the cash basis of accounting. So for example, if we purchase any cars are still treated as a capital item, and therefore we claim capital allowances for cars. And also for land and buildings, these would also be included as capital items and therefore would not be adjusted for in our profit or loss. Also, if any goods are taken from the business by the owner for personal use without reimbursing the business, if we're using the cash basis, a just and reasonable amount should be added back, and therefore the accounting profit won't be the same as the trading profit. Let's move on to part B now. Sunita runs a small building business. She has opted to use the accruals basis of accounting and has made an accounting profit of £84,000 for the year. The accounts include a depreciation charge of £1,200, a gain on disposal of an asset of £600, a salary of £20,000 for Sunita, salaries of £16,000 each for 4 builders. One of these builders is Sunita's husband. Lease costs of £3,000 for a car with carbon dioxide emissions of 170 grams per kilometre. The car was used wholly for business purposes. During the year, she took some goods from inventory which had cost £800 and had a resale value of £1,000. No entry was made in the accounts on the removal of the inventory. And capital allowances for the year have been calculated as £8,200. And the requirement asks us to calculate the taxable trading profit for Sunita's business by entering adjustments to the accounting profit below. If no adjustment is required, you should enter a 0. So do pay attention to this because this question is marked by the computer, and if you don't follow the instructions, then the computer won't recognize your answer and therefore you won't get the mark. So you can see in the table then they've given us the accounting profit and we need to make the various adjustments to it. Okay, let's go down the list. The first one is the depreciation charge of £1,200. So this is an expense in the accounting profit, so this makes the profit get smaller, but depreciation is not an allowable expense. Remember, we would have capital allowances instead. So what we need to do then is add back the depreciation and we would deduct the capital allowances instead. And the question tells us that we should use a minus sign to represent negative numbers. Okay, so we add back the depreciation and deduct capital allowances. Next we have the gain on disposal. So this would be treated as a capital gain. It would be treated with capital gains tax rather than through trading profits, and therefore the gain needs to be adjusted. So a gain would be added to profit. So now when we're making this adjustment, we need to deduct it. So let's remind ourselves of what the number was. Here we had a gain of disposal of 600. So we need to take away 600. We need to take away that gain so we come back to its trading profits. Next we have salaries. So let's have a look at the information again. So we've got a salary of 20,000 for Sunita and then salaries of 16,000 each for the 4 builders. Well, those 4 builders are employees and therefore that's perfectly allowable as an expense. But for Sunita, if Sunita takes that salary, that's effectively just taking some of the profits and Sunita needs to be charged tax on those. So we need to adjust that. So at the moment that has been deducted from profits. So we need to add back the 20,000 salary so that you can see, look, the tradable profit is getting bigger at the bottom and therefore she's going to be taxed on that salary. Next we have the goods taken from inventory. So let's remind ourselves. So during the year she took some goods from inventory which had cost 800 and had a resale value of 1,000. So no entries were made in the accounts on the removal of the inventory. So how should we deal with this? Well, under the accruals basis, if nothing has been recorded in the accounts with this removal of goods, then we should add back the selling price. And if it's been entered at cost, then we should add back the profit. So in this case, no entry has been made, so we should add back the selling price and had a resale value of £1,000. So we can enter 1,000 in our answer. Then we have the car lease. So we're told that there's a lease cost of £3,000 with carbon dioxide emissions of 170 grams per kilometre. And the reference materials give us some guidance here. So we have 15% of the lease cost if there's more than 50 grams per kilometre, which is the case that we have in the question now. So we want 15% of the 3,000, which gives us an add back of 450. So there's our total taxable trading profits of 97,850.